Hello, everybody. My name's Drew Demon, and I'm the Devil Stockbroker. This is just a recap of the market for December the 19th. We opened up Monday pretty red. So, looking back at the market today, you can see that we are already into a short position that is going quite well in our favor. The continuation to the downside does look like it's being met with a little bit of support here at around $3 or $380. Excuse me. Wow, that would be quite a difference, wouldn't it? On the 10-minute chart, you can see that we've got quite a bit of bullish divergence here while the SPY was trading sideways. So this was signaling some upside momentum in the market, but it seems to have gotten a last little drop in it before it finally saw some strength to the upside. So a couple possibilities that I see for the market going into Tuesday. We may see a brief turnaround in the market and possibly retest this resistance. If I do see that the market is surging tomorrow, I'll probably close this short position and switch long in the market just for the temporary because I do see that the volume is turning towards the upside and we have been trending down pretty strongly. I already took one extremely profitable short position from the top of the market back when we dropped out from this position after the conference and speech from the Fed. So after that drop from 400, we also averaged down positions at 395. That was where our original entry was. We took a $3,700 profit on that move. So now we're basically playing with house money and trying to grow the portfolio. We want to protect our gains as much as possible. So for this temporary swing, I've been waiting for a bounce and I've just been taking small swings on the way down. So right now we're getting a little bit of bounciness here in the market, so we have to wait and see what happens. But I am kind of anticipating at least the possibility of a small recovery where we start to see a little bit of bounciness before continuing downside to the market going into the end of the year. So the Christmas rally, though, I still think is pretty much done at this point. There's a couple of other things that I can point out to you for the market going forward. Right now, I've just entered into a long position on SOX S. This is an inverse ETF on the SOX ETF. Basically, it's kind of like DRV is to XLRE, the real estate index. It's a inverse leveraged ETF. So 3 times inverse leverage to the SOX, whatever the Philadelphia Semiconductor Index does, SOX S does 3 times the opposite. And it's also cheaper. So it's a little bit more cost effective for short term trades. So I'm trading this with the expectation that the market is going to basically do this little number and trade all the way down to this point by sometime mid-February or possibly early March. But I think that we'll get a lot of the push down over the Christmas season because I anticipate that Christmas earnings for the semiconductors market is actually going to be way worse than it has been historically because of inflation, supply chain issues, and the ongoing recession. I want to recap the stock market heat map as well for you guys. So the electronic technology sector overall is what's performing the worst. Energy minerals is holding up so far, but we're seeing red everywhere right now. Every single week we get worse and worse performance in the durables, the consumer discretionary, retail, finance, tech sector, everything that is mostly risk on whatever's listed on the NASDAQ or the Qs is what's getting hurt the worst. Today's daily performance shows that the electronics and technology sectors are the ones that did the worst today. So we're going to continue to play this to our advantage and keep on working our way down on short positions. So for my strategies going forward for the remainder of this year and going into spring, I'm basically going to be looking for short swings, trading the trend, looking for little bounces up to the 50 period EMA on 15-minute, 30-minute, and 1-hour charts. Anytime I see it touch one of these EMAs on long-term time frames, especially the 15-minute, because that's my favorite time frame to trade, I'll be taking additional short positions and averaging down on tech sector, semiconductors, and finance sectors as well. So for those of you who have been paying attention to some of my other videos, the finance sector had a little bit of a bounce today. So tomorrow I'm going to be entering into a short position, hopefully somewhere around VWAP at entrance today. We saw the move to the downside that we were anticipating. I did promise to get into a position, but I got up late this morning, so I didn't have an opportunity to get down into my position. So I'll look to re-enter somewhere around $33 or $34, somewhere in that range, depending on how the market reacts tomorrow morning. But generally, the finance sector looking very bearish. I'm paying especially close attention to JP Morgan, Chase and Co. This is the JP Morgan and Chase banks. And so far, we have seen clear evidence of tops. So we had a head and shoulders show up on this. Boom, 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 boom. All right. Head and shoulders. We broke the neckline. It's now bouncing off of support. I'm anticipating this taking a huge move to the downside. I'll be entering into a short position on JP Morgan tomorrow. Another one to watch for is Morgan Stanley. Morgan Stanley has also showed a triple top pattern where we've had these rising tops right here. The weakness in the charts has shown very clearly that resistance above $94 is too much for Morgan Stanley to continue, and we've clearly established this resistance at $93 is rock solid. Now that they have dropped back through their gap, now they have all of this area to fall back, and you can see that the volume shelf gets weaker as we get further down in the price chart. So Morgan Stanley looks like it has a lot of room to fall back down to at least to this support of $75. So for me, Morgan Stanley is a very easy short that I'm going to set my risk up here just around its 2-hour 100 EMA. Set my target down at its last known leg of support right here. That's a good 3-to-1 risk to reward ratio. That'll be my trade starting out in the morning. I'm going to see how it reacts first thing to the opening bell and see if we get a bounce and maybe average down on my risk just a little bit. One of the things that I want to stress is that the bond market is starting to get a little bit extra scary. So the 3-month has been inverting over the 2-year bond yields for quite some time, and that's because bond yields on the 2-year are beginning to go down while 3-month is continuing to sustain itself. The 2-year yield, however, started screaming to the upside in the last few trading days. So this big bounce here off of this bottom is indicating that yields are back on the rise, which is destroying stock market valuations. So while these bond yields are starting to go up, be very, very careful about taking any long positions in the market that are overly exposed. For the first time in a while, we're starting to see just a little bit of strength in the yield curve. So this could be a signal that the yield curve is ready to start moving back towards the zero inversion line. And remember what I said about my past videos, that whenever we see the treasury curve uninvert, that usually signals an imminent crash or capitulation. That's going to do it for this video. I want to thank you guys for watching, and I'll see you in the next one. But until then, have a hell of a time in the markets. Thank you guys so much for tuning in to watch this video. If you enjoyed the content and you found this information helpful to you in your own trading strategies, be sure to leave a like on the video. It helps out the YouTube algorithm and helps us reach out to others who need this information too. Be sure to subscribe if you want to see more. And if you're not a member of Hell's Trading Floor already, consider joining our Discord by joining us at hellstradingfloor.com, which will allow you to sign up for our Discord at discord.gg/hellstradingfloor. Thank you guys so much for watching, and I look forward to seeing you in the next one. Until then, have a hell of a time in the markets.